right, friends, welcome to you all around the world. Welcome to Follow the Money Radio. So grateful to have you here along for the ride today. We have a great show lined up for you as we continue to move through our 5 levels of financial freedom. We're going to continue through and actually conclude level 2 today. You know, we've been going through the protection component of the 5 levels of financial freedom. We've talked about auto insurance. We've talked about home insurance and liability insurance. We've talked about health insurance and so many other types of insurance. And this is the topic that many people kind of, their eyes glaze over when you talk about insurance. They think, what? You know, what about we talk about real estate, or let's talk about, you know, things like trading or stocks or cryptocurrencies. And we certainly talk about all of those things here at Follow the Money. That's one of the big things we do talk about is investing. But as we've talked about so many times on this podcast and so many times on our website, the truth is so many people, and I tell you the truth, as someone who has been, you know, practicing, I've been helping people with life insurance now for 15 years. I can tell you that many people put the cart before the horse. So they will certainly be ready to take on risk assets and they'll fill up their risk bucket, but they won't be prepared for life's uncertainties oftentimes because they tend to underprepare, or we tend to, quite frankly, when we're young, we have an Adonis complex where we think nothing could ever happen to us, you know, and so we tend to not think about what's in the future and tend to focus on the here and now, which totally makes sense. It's understandable, but nonetheless, you know, not planning properly can cause a lot of unforeseen problems. So today's episode is going to be focused upon something really close to my heart. As I mentioned, you know, I got life insurance license back in 2007, 2008. And, you know, I've witnessed firsthand the profound impact of securing one's legacy through sound financial planning. So over the next 30 minutes or so, I believe you're going to gain invaluable insights into the world of 3 important things, which really many people refer to as estate planning. These are estate planning tools. And these things will include life insurance, wills, and trusts. So if you're interested in those topics, or even if you're not interested, but you know you probably should be, stick around. These are not mere tools, by the way. These are your keys to providing peace of mind during your lifetime and preserving your legacy for generations to come. And by the end of this episode, I believe you'll possess a clear understanding of how these crucial elements can help fortify your financial foundation. So if you've ever wondered about the practical steps to securing your loved ones and leaving a lasting legacy, you're in the right place. Join me on this enlightening journey, and together we're going to navigate the path to financial freedom. Thanks for entrusting me as your guide. Let's dive in. All right, so as I mentioned, this week we are concluding level 2 of our 5 levels of financial freedom. We're going through all 5 levels, and we've been talking about them now for the last several weeks on our podcast. And we're going to continue laying that solid foundation for the wealth building process through these 5 levels of financial freedom. By the way, at any time you want to go to our website, you can see all of these online, the whole process online for free, followthemoney.com/5 levels. Now, in this very first segment, as we begin this, what we want to focus upon is the cornerstone of securing your legacy with life insurance. Now, I understand that contemplating our mortality is not something that we do lightly. Yet it's a conversation that carries profound implications for our loved ones and the legacy that we leave behind. You see, life insurance isn't just about dwelling on the inevitable, our future death. I mean, everybody, as we well know, the death rate is 100% still. Everyone dies. It's not really about that as much as it is providing for those that we care about most. It's a promise. It's a safety net that ensures that our absence doesn't become a burden to those that we leave behind. The truth is, as we've said many times, there are no second chances. There are no do-overs when it comes to life insurance. It's a decision that requires forethought and action. It's not about fearing the future. It's about empowering it. It's about ensuring that even in our absence, our loved ones can move forward with financial security and peace of mind. Now, let's be clear at the outset here, life insurance is not for everyone. It's for those of us who have someone relying upon us, someone whose financial future would be at risk if we were to leave this earth prematurely. And for some, it's a powerful tool within a financial plan, offering unique benefits like tax-free death benefits and living benefits, where you can even borrow from your policy tax-free. These are powerful tools that can be harnessed throughout our lives, even without requiring the death benefit to be paid out. Many people don't realize there are living benefits to life insurance. Of course, we're talking about the permanent type of life insurance. We'll get into that in just a few minutes. But life insurance is not just a policy, it's a promise. It's a financial tool, as we said, that's designed to provide a safety net for your loved ones in the event of your untimely passing. So we think of it as a legacy of financial security that you leave behind. It's about ensuring that even in your absence, your family can continue to move forward with their dreams, education, and daily living expenses. This is a particularly important topic for those of you who are husbands out there or wives who are in the workplace and your spouse and your family relies upon you for money, for their financial future. And especially for husbands out there. I could tell you many heartbreaking stories. I'm thinking of one right now. I'll save it. But there are many times that I've seen situations that I wish could have went differently. And that's just unfortunately what you see whenever you do help people in this area. But nonetheless, the important thing to keep in mind here is that this is especially for those who have someone that they have someone to protect. If you have someone to protect in your life, if you have something to protect in your life, then life insurance should be something that you consider. Now, not all life insurance policies are the same. There's basically two ways to acquire life insurance, similarly to the two ways that you can go about getting a home, right? You can rent or you can own. Right? So really just think about it that way. I mean, quite frankly, there's many different types of life insurance policies. I'm not going to bore you with all the details, but remember that, and we'll talk a little bit about the specifics, but not much, because this is just really an introductory podcast episode on this topic. But remember, there's two ways. You can rent your insurance or you can own your life insurance. So when you rent your life insurance, you purchase what is known as term life insurance. Most people have at least heard of this type of insurance in which a person pays a premium in exchange for a promised death benefit in the event that the policyholder dies within a specified time frame. But once the time frame runs out, say 10, 20, 30 years, whatever the term is, the policy expires and the policyholder's beneficiary will no longer receive the death benefit in the event that the person dies. So that's term insurance. That's where you rent your insurance. The second way to obtain life insurance is to own it. And when you own your life insurance, you purchase what is known as cash value life insurance. That's what it's often known as. Other times you might hear it called whole life insurance or permanent insurance. There's other kinds of permanent insurance. There's universal life, which is designed in many ways to last your life. It also comes with a cash value component. But nonetheless, the features of a cash value policy include a death benefit payout upon the policyholder's death, but also cash value accumulation during the policyholder's lifetime, and a tax-sheltered area where the interest and earnings are not taxable. So your cash is basically in a tax-sheltered environment. Now, the owner of the policy can also use the cash value as a fund from which to borrow, which is why we talk about permanent life insurance actually being a potential income stream in retirement. Now, the owner of the policy also has the option to use the cash value to pay policy premiums later in life or to pass it along to his or her heirs. Now, one of the questions that most commonly comes up when people are looking at life insurance is trying to figure out, how much do I need? How much life insurance should you buy? Well, determining how much life insurance you need is obviously a crucial step in your financial plan. It's about striking a balance between providing substantial financial security for your loved ones and ensuring that you can afford the premiums, right? But you got to consider factors like your debts. How much debt do you have? Do you owe a lot of money on your mortgage? What about future expenses? Do you need to pay for college for your children, or buy them vehicles? Or what about replacing your income in the event that you can't work? Many financial advisors will tell you that a good rule of thumb is to aim for coverage that's around 10 to 15 times your annual income. I think that's a fine rule of thumb. We often look at it in a more scientific way And so I will often, when I'm helping a client, I will look very closely at many other things as well to come to that number. Now, the other thing that was really important when it comes to life insurance, and this is really key, is designating your beneficiaries, right? And making sure that your wishes are honored. So naming a beneficiary is a critical aspect of your life insurance policy. And when you sign up for life insurance, that's going to be a major question they're going to ask you. In the event that something happens to you during this policy, during the policy term, who do you want to receive the death benefit? And so it ensures that the benefits are distributed according to your wishes. So you got to be specific in your designations, and you got to review them periodically, especially after major life events like marriage or the birth of a child. This step ensures that your legacy is directed precisely as you intend. Hey friends, Jerry Robinson here from Follow the Money Radio. Are you ready to unlock the secrets to financial independence? I invite you to join me for a complimentary 20-minute discovery session. It's your chance to dive deep into our 5 levels of financial freedom and get answers to your burning questions. Together, we'll craft a roadmap to your financial success. Don't miss out on this exclusive opportunity. It's a limited time offer. Visit our website, followthemoney.com/coaching to schedule your free 20-minute session right now. Your financial freedom journey begins today. Hey friends, Jerry Robinson here from Follow the Money Radio. For a limited time, you can enjoy an exclusive 15% discount on all of our premium products and services. From insightful video courses to our books and our membership plans designed for traders and investors, it's all here to supercharge your financial journey. Simply use coupon code 15OFF, that's 15 off, at checkout. Don't miss this chance to elevate your financial knowledge and skills. Visit our website, followthemoney.com today. Your path to financial success just got even more rewarding. Seize the opportunity. Get 15% off all products and services for a limited time. Followthemoney.com. Now, as we conclude this topic of life insurance, because we're going to talk about wills and we're also going to talk about trust in today's episode, let's just really quickly, let's mention about 3 final things to remember. Many of you already likely have life insurance, or you maybe have it through work, or maybe you bought an individual policy. Maybe you don't have it. Maybe you need to talk to an insurance agent and buy life insurance. But regardless, to those who already have it, I got to stress the importance of a periodic review. If it's been more than 5 years since your last life insurance checkup, you may be missing out on opportunities to take advantage of newer life insurance policies that are more cost-effective and competitive, because rates have come down in some ways. Also, it's been a little different in different areas. But let's go through some of the list of things that you really might want to review your policy and make sure your beneficiary designations are proper and the amount of coverage that you have is still proper. Think about if you're newly married, or if you've lost a spouse recently, or if one of your heirs has been recently married or divorced, or if you have a child or a grandchild that's recently been born, or maybe you've adopted, or maybe you had a major career change, or maybe you recently retired. These are just some of the key moments in your life where you want to think, okay, maybe I need to go review that life insurance policy and make sure it's still proper. Make sure that it's still properly set up and properly structured. Or maybe the beneficiary designation needs to be updated. And so those are things that you might want to think about. Another thing to keep in mind, too, about life insurance as we conclude this topic is the fact that life insurance is not a right. This blew my mind whenever I first learned about life insurance and became licensed many years ago, is the fact that for some reason, I had thought that anybody could go buy life insurance on anybody. And of course, I hadn't really thought about it too much until I actually went and, studied and became licensed as a life insurance agent many years ago. I had no idea. I thought you could just walk in and just, buy life insurance on a total stranger. Well, it turned out that you used to be able to do that. Back in the old days, the mob used to buy life insurance on people and then knock them off and then, get the money. So they had to create new laws, of course, over life insurance. The other thing is that life insurance, I also used to think that you could buy as much as you wanted as long as you could afford it. So maybe you're somebody who says, I want to buy $20 million worth of life insurance. And as long as you could afford the premium, I thought you could do it. But in reality, that's not true. In fact, one of the craziest things that I noticed after becoming licensed as a life insurance agent many years ago was the fact that I saw people get turned down, right? And I didn't realize that people could be turned down for life insurance, or the fact that they couldn't buy as much as they wanted. They might want to buy $2 million, but they could only buy, say, $1 million in coverage, right? So the takeaway here is that don't assume that you will always be eligible to buy life insurance or that you'll always be able to buy the amount that you want. Once an insurance company deems you uninsurable because of health or some other reason, the life insurance strategy will be one less ace in your hand when it comes to your financial plan. So the advice I typically give young people is to buy, cheap term insurance when you're just getting started and get as much as you possibly can, because once you have it, and then of course, make sure that life insurance is what we call convertible. Make sure that you can convert that life insurance from term insurance to whole life insurance over time. But I don't want to get too in the weeds there, but that's a recommendation that I make often. Now, the last thing before we move on is just to remember that in the world of life insurance, and as I said like a broken record many times on this podcast, there are no second chances. There are no do-overs, right? So you cannot die and then go buy life insurance, right? Just the same thing, we're going to move into wills and talk about wills next. It's the same thing. You can't die then go buy a will, right? Or go get a will. You can't die and then go put all your money into a trust. I mean, there's ways to do that with pour over wills and things like that. But the point is that you don't really have that ability if you don't plan. So the point is that there are no second chances. So you've got to do it the way you want it done from the very beginning. Very, very important there on the topic of life insurance. All right, so we're moving right along in today's podcast episode. We're talking about securing your legacy. You've worked hard throughout your life to build your castle, your financial castle, and now you want to preserve and protect it. You don't want to hand it all to the federal government. You don't want to hand it to, to nursing homes. You don't want to hand it off, to drug companies. Instead, you want to save as much of it as you can to pass on to your heirs, right? To your family and to those worthy causes that you want to support. Well, that's where we get into the idea of course, life insurance, but also your last will and testament. So the next cornerstone in securing your legacy is crafting that last will and testament. And this is a legal document, which is your voice when you're no longer here. It ensures that your wishes are carried out precisely as you intend, right? A while back, I read an article that showed about 50% of Americans don't have a will, right? And only 42% of Americans have a living will or a healthcare proxy. Now, you may not know what those are, but we're going to talk about those briefly now. So if you don't have a will, the state in which you live in, by the way, already has one for you. You may be surprised to find out that if you don't know what to do with your assets, well, the government's going to come in and decide, right? So you can let the government decide if you want to. You can let them be the decider of who's going to get your assets and who's going to be the guardian for your children. They'll gladly make those decisions for you. But you can choose to make those decisions for yourself by crafting a will. And many people say, well, I don't want to think about that. I don't want to think about death. I'd rather think I'll do that later. Well, when you do it later, sometimes you never get around to it, right? And then the state ends up becoming the executor of your will, right? So of a will that you don't have. So they just literally just make it, they're the ones who are going to decide. And everything has to go through probate and all of this. So the point is that if you don't have a will, then you're leaving your assets and yourself and the other things as well in your life, and even the ones you care about, you're kind of leaving them, these things at risk. Also, if you were to becoming incapacitated and unable to make decisions for yourself, who would take care of your affairs? Who would make medical decisions for you, right? So maybe you don't die, but maybe you become incapacitated. Well, to make sure that you make all the decisions regarding your affairs, here's some of the documents, that you're going to want to have. Obviously you're going to want to have your last will and testament. And the last will and testament is not just a piece of paper, it's a blueprint for your legacy. It outlines exactly how you want your assets and belongings distributed after you pass. It also allows you to name guardians for your minor children, ensuring that their well-being is in capable hands of your own choosing. Now, when you look at a will, a comprehensive will, it includes, several different things. It includes the executor. Those are the individuals responsible for overseeing the distribution of your assets. Then you have guardians. These people are named to take care of your minor children should the need arise. There's also bequests in the will that specify who will receive specific assets, whether they be financial or some other kinds of assets. Now, it's important. I want to stress this here, so vitally important, is that I am not an attorney. I'm not an estate planning attorney whatsoever. I understand estate planning, but I am not an attorney. And it's strongly advisable for you to go and talk to a attorney on this topic. I would not want to be crafting my own will, even though you can. And even though in certain courts, we've even seen that like holographic wills will hold up in court. Like if you just take a piece of paper and a pen and you just write out on piece of paper, what your will is. Like I want Johnny to have, my car, and I want, Bob to have so-and-so. Well, then technically that will hold up in court sometimes. However, that's not really, you can't guarantee that it will, and you also don't want to take that risk. So many people try to save attorney fees and say, well, I don't want to pay the attorney. Don't do that. Quite frankly, talk to a professional, a legal professional who can help you draft that will in a way that is legally sound and that covers all the necessary details. An attorney who is experienced in estate planning will help you navigate the complexities of this space and will help provide you peace of mind that your wishes really will be honored. When I think of wills, I just can't help but thinking about Aretha Franklin not too long ago. You may remember Aretha Franklin passed away, and then turned out she had two wills. She had one will, I guess, in a safety deposit box, and then they found another will later on in the couch between the cushions. Right? So she had two wills. You say, well, which one are we supposed to honor? And so that became a big, national story, and reminded people of the importance of estate planning. I know this stuff kind of sounds, difficult and cumbersome, and we don't want to talk about it, but I really got to tell you, it's one of the most important topics when it comes to your finances. So when you're thinking about financial planning and paying off debt and trying to save money and trying to, invest, and you're trying to buy real estate, or you're trying to buy stocks, or you're trying to buy, don't forget that you need to have a moat around your castle. You've got to make sure that you've got this stuff lined out, and you really need it for peace of mind. Now, because life is dynamic and circumstances are changing, it's also crucial to review your will periodically, just like you do your life insurance. Again, especially after major life events, right? So like marriage or the birth of a child, or maybe you buy a business, or take on some new assets, or you inherit something. This ensures that your will remains aligned with your current situation and desires. And remember, your last will and testament is your voice when you're no longer there. It's a powerful tool for preserving your legacy, providing for your loved ones. Now, let's talk about some of the other things besides the will. The will, of course, is needed. It's a piece of paper which allows you to designate who will receive which of your assets upon your death, right? And also your guardians, who's going to be the guardian. You designate the guardian for your dependent children. However, that's not the only important document here when it comes to this topic. We also want to have a durable power of attorney, which is another piece of paper, right? Which designates who will handle your money. So this is a durable power of attorney for finances. So this durable power of attorney will designate who will handle your money, your real estate, your business affairs, and then other financial decisions for any period of time that you're alive, but unable to handle these matters for yourself. So again, this is very powerful. So when you're drafting up your will, you also want to draft up a durable power of attorney. This is something, again, that your estate planning attorney or someone who's drafting your will, the attorney who's doing that, they can help you with this. And they're probably very likely going to tell you to do this. But if they don't, for some reason, which I can't imagine, you do want to bring up, hey, I also want a durable power of attorney. In most cases, you just if you're married, you just make your spouse, the person who handles that, because otherwise your spouse may be in a tough time trying to log in. Like if something happens to you, and then your spouse needs to log into, to different accounts that you are logged into and only your name is on, well, they're not going to have permission. And it might be a nightmare for them. So in other words, this lack of planning can really devastate your spouse in the event of something happens. So not only is your spouse devastated because something happened to you physically or something and you're incapacitated, but then not only can they not talk to you about things, but now they can't even access some of your financial assets to help you because you didn't plan it. Okay, this is what we're talking about. Planning, in many ways, is love. It's love for your spouse. It's love for your children. It's love for your family. Not wanting to put them through something because you just forgot. You just didn't think about it. It slipped your mind. These are important decisions, friends. Very, very important. So we have the will and testament, your last will and testament. We have the durable power of attorney. We want that. So it gives your spouse or someone else the ability that you designate to be able to handle your financial affairs in the event that you're incapacitated for a period of time. Now, we also want to have a healthcare power of attorney, or a healthcare proxy is really what it's known as. And what the healthcare proxy does, and this is very important, but it allows you to name who will make the medical decisions for you. So not just financial decisions, but you also need to have someone who will be able to make medical decisions for you if you're unable to make them for yourself, right? And that's a very important thing. So the healthcare proxy, again, I've seen this happen so many times. It's sad where individuals will end up fighting over who should be making the decisions because mom or dad didn't specify this. And so now the siblings, maybe if they're dealing with mom, they're like, well, who's supposed to make the decisions? And then somebody's like, well, I think I heard mom say that she didn't want to be left on the machine. She wanted it unplugged, or the other person says, no, I remember she didn't say that. And then you end up creating all this kind of tension within the siblings. Why? Because there was no planning involved, because someone didn't take 5 minutes to sit down and say, these are my wishes and put them on paper. Why? Because they didn't want to think about it. They didn't want to think about it. And it's understandable you don't want to think about it, but you have to think about it because we're all going to be in this situation at some point, right? And so we've all got to make those wishes known so everybody knows, and you put them on paper so there's no innuendo, there's no sibling arguments or anything like that. You make it known and everybody's like, okay, well, this is what mom wanted, or this is what he put it in his own handwriting. Here it is. This is what he wanted. He went to the attorney and this is what they did. And then you want a living will, which a living will is where the living will is something that the doctors and family members will be able to see exactly what kind of health care you do want and maybe more importantly, that you do not want to receive if you're terminally ill, you're incapacitated, or maybe you're in a persistent vegetative state. In that event, here is the kind of medical procedures you want. Here are the things that you don't want. And this speaks for you whenever you can't speak for yourself, right? So it's very important to have these documents. If you go to an attorney, you can get a will and the advanced healthcare directive documents drawn up, for a very reasonable fee. I would not hesitate at all to do this. This would be the very next thing that I did if I didn't have a will already. If I had a family and I didn't have a will, it'd be the very first thing I'd be doing. So I would not delay on that at all. Okay, so there we've talked about life insurance and we've talked about wills. Now let's talk about the third and final aspect of securing our legacy. The third, the final cornerstone, so to speak, of securing your legacy, and that is fortifying it with trusts. You've probably heard of trusts before. Trusts, my friends, are like a conductor's baton to your financial symphony, right? They allow you to pull, and I often say this, they allow you to pull strings from the grave, orchestrating precisely how your assets are to be used and dispensed even long after you've left this world, right? So trusts are incredibly powerful, and they come in different flavors. So, just like we talked about, you can rent or own your life insurance, right? You can either buy term insurance or buy some sort of permanent insurance. Well, you have choices when it comes to trusts, and trusts come in different flavors. As I mentioned, there's two main forms, but there's many different kinds of trusts. And again, I am not an estate planning attorney. I really want to encourage you to meet with one contact a local attorney about these topics. If you have real specific questions about these things and getting them set up, you want to talk to a professional. Estate planning attorneys are your ally. They're your friend. You're going to want to get their help. But let's just talk about a little bit about trust. So trust come in, two main forms, revocable and irrevocable. Again, there's other kinds, but for our purposes, very basic. We're just talking about two different kinds, revocable and irrevocable. The revocable living trust allows you to maintain control over your assets while avoiding the probate process. An irrevocable trust offers enhanced asset protection and tax efficiency, though it comes with certain restrictions. And understanding those restrictions is key to making the right choice for your legacy. So let's just go through both of them really quickly. So first, there's revocable living trusts, right? These allow you to maintain control of your assets and avoid probate. So it's a flexible tool, the revocable living trust, and it allows you to manage and distribute your assets during your lifetime and after your passing. It enables you to sidestep the often lengthy and public probate process. And it also ensures a smoother transition of your legacy to your chosen beneficiaries. Now, here are 5 benefits of a revocable trust. Number 1, as I mentioned, you avoid probate, right? So it allows you to pass your assets directly to your chosen beneficiaries without going through the probate process. And if you've ever been through that process, or you know somebody who has, it can be lengthy and it's not very fun. So this, especially in a time of grieving, when someone has lost someone and and then the probate process is hanging things up in kind of gumming things up in the work. So this can save time. The revocable living trust can save time, money. It can also save money. And maybe more importantly for everybody, it maintains privacy about the assets that are being passed, right? So that's a very important thing as well. Another benefit to revocable living trust is that obviously it maintains your privacy, but also it gives you flexibility and control. You have the power to modify, amend, or revoke the trust during your lifetime as long as you're mentally competent. And this provides a lot of flexibility to adapt to changing circumstances. Also, if you become incapacitated, the person you have named as the successor trustee can step in and manage the trust, assets for your benefit, which avoids the need for a court-appointed guardianship or conservatorship. So, again, it also helps you in the case that you become incapacitated. And then, as we mentioned, the revocable trust can really provide for a seamless transition of assets to your chosen beneficiaries without the delays and potential conflicts associated with probate. So now, the revocable trust offers many benefits. It's essential to consult with an experienced estate planning attorney, as I've said before, to make sure that it aligns with your specific goals and circumstances. Okay, so that's the revocable trust. Let's talk about the irrevocable trust. What's the difference? What's the difference between revocable and irrevocable trusts? Well, the irrevocable trust maximizes asset protection and tax efficiency. Okay, so irrevocable trusts provide a higher level of asset protection and can offer significant tax benefits. When you place your assets into an irrevocable trust, you've effectively removed them from your estate. Now, that's not the case in a revocable trust. A revocable living trust allows you to access those assets. You have control of them still. Even though they're placed into the trust, you still have control. But when you place assets into an irrevocable trust, you remove them from your estate. And the reason why that's good is it potentially reduces estate taxes. I mean, that makes sense, right? But it's important to really consider the implications because these trusts are not easily altered once you establish them. Now, there's some really great benefits of irrevocable trusts. Obviously, the asset protection. So assets that are placed into an irrevocable trust are generally shielded from creditors. They're shielded from lawsuits. They're shielded from legal claims. And this can be particularly crucial for individuals who are in professions with higher liability risks. And so these are pretty popular with doctors and other people who have high incomes. Irrevocable trusts are a way to kind of get things out of your name, not necessarily like in some sort of criminal way, but in a way that kind of protects you from our litigious society. Also, estate tax reduction. So because the assets are removed from your taxable estate, the irrevocable trust can then reduce or eliminate estate taxes. Now, estate taxes used to be a lot more problematic. They were, the threshold used to be a lot lower, and so irrevocable trust used to be really popular because of that. In fact, many people would buy what we call ILETs, and they would place life insurance into an irrevocable trust, and it would just maximize the tax efficiency, and of course, there's tax-free distribution of the death benefit. And so, for a period of time, when estate taxes the threshold was relatively low, irrevocable trusts were very popular. Well, with estate taxes, the threshold now being fairly high, that will sunset soon, but it's still fairly high. You don't see a lot of demand for this from people who don't have a lot of money. So typically, you're going to need a pretty high amount of money to justify an irrevocable trust, unless you're dealing with some other kind of special circumstance. But again, if estate taxes are a concern for you, well, then irrevocable trusts are a very powerful way to transfer or remove those assets from out of your taxable estate. Also, for those who are trying to plan for Medicaid planning, by transferring assets into an irrevocable trust ahead of that 5-year look-back provision, where you have like 5 years. It's different in some states, but 5 years is the general number. Well, if when you transfer assets into an irrevocable trust well in advance of needing long-term care, it can protect those assets from being used for the spend-down provisions that Medicaid requires, so that you can qualify for Medicaid benefits to pay for your nursing home expenses. Otherwise, those assets might be used to pay for your nursing home, and nursing home can get very expensive, right? The nursing homes can cost a fortune. So for Medicaid planning, you'll often see irrevocable trusts used. Also, another reason why some people will use irrevocable trusts is for individuals with disabilities or special needs. That's a way that they can hold assets that don't jeopardize their eligibility for government benefits, like SSI, disability, or Medicaid even. And then finally, when you can't directly change, the terms of an irrevocable trust, you can establish clear instructions for how assets are to be distributed among your beneficiaries, which does provide you a level of control over your legacy. Now, I want to stress, though, that it's very important for you to know, if I haven't already said it, and I believe I have, but let me say it again. It's important to note that once assets are placed in an irrevocable trust, you generally cannot get them back or make significant changes without the consent of the beneficiaries, which can get pretty hairy. So you want to be very careful when you consider putting assets into an irrevocable trust, and you definitely want professional advice from an attorney, from an estate planning attorney. That's essential before establishing one. Now, obviously, you're going to need to name a trustee. These will become the responsible stewards for your legacy. A trustee plays a crucial role in managing and distributing the assets within a trust. So you need to choose an individual or an entity who is reliable, responsible, and aligns with your vision for your legacy, because they're going to be acting as your steward, ensuring that your wishes are carried out faithfully. And, the other thing, too, about trusts is that, they're not one size fits all. Each type serves unique purposes. Selecting the right one requires a lot of consideration and, again, professional advice. Trusts are tools of empowerment. They enable you to shape and protect your legacy according to your specific desires. So they're very, very powerful. All right, folks. So there we've done it. Quick and painless, huh? We went through the topic of estate planning, securing your legacy, a concise, but I would say somewhat of a comprehensive look at these 3 critical tools for securing your legacy: life insurance, wills, and trust, each playing a pivotal role in your financial blueprint. So by now, you understand these instruments perhaps a little bit better. You realize that they're not just about numbers and legal jargon. They're really about providing peace of mind, about ensuring that your wishes echo throughout time. It's about leaving a mark that endures. And as you embark on the journey of legacy planning, I want you to remember that it's not about the assets that you leave behind. It's about the values, the lessons, and the memories that live on. It's about empowering your loved ones to thrive, even in your absence. It's about embracing the tranquility that comes from knowing your legacy is secured. So I encourage you to take the time to reflect upon what matters most to you and then consult with professionals and craft a legacy that resonates with your heart. Because in the end, it's not about the quantity of wealth you leave, but about the quality of impact that you make. Welcome back to the final moments of today's broadcast. I sure hope this has been helpful for you today. We finally concluded level 2 of our 5 levels of financial freedom. We've gone through so many different topics: auto insurance. We've talked about health insurance and home insurance and liability insurance and disability insurance and life insurance and wills and trusts, of course, today. And we've actually been receiving quite a few questions since we started this 5 levels of financial freedom podcast series, and we've decided to open up some spots for those who might have questions to talk directly with me. So if you have any questions about what we've covered today, or if you're curious about how our 5 levels of financial freedom can work better for you, I invite you to take the next step, and that is to schedule a free 20-minute discovery session with me, where we'll dive into your specific financial situation and we'll explore how you can secure your legacy and move closer to your financial goals. You may have questions about something you've heard in our 5 levels of financial freedom. Well, as I mentioned, I'm not an estate planning attorney, so I can't help you draft a will, but I can certainly point you in the right direction. I'm not going to be able to help you draft a trust, but I'll be able to point you in the right direction and make sure that you're not overpaying and make sure that you're dealing with somebody, who is trustworthy. And of course, we certainly help in other ways. I can certainly help you with life insurance or any of those types of topics as well. So we're happy to make that available to you. All you have to do is just head over to followthemoney.com/coaching, and you can book your free 20-minute session. It'll be a quick phone session. We'll talk and discuss anything you want to talk about. I look forward to connecting with you. Remember, securing your legacy and safeguarding your future begins with a single step. So simply go over to followthemoney.com/coaching, book a free 20-minute session to talk with me directly. I'd love to meet you, talk with you a little bit, and see if there's any way that we can be of service to you. And in the meantime, feel free to go to our website, followthemoney.com, and just learn more about our 5 levels of financial freedom right there. All right, friends. Well, that brings us to the end of today's broadcast. And as always, I'd like to leave you with a final word. And that is simply this: life insurance is not for those who die. It's for those who live. Life insurance is the only tool in your financial toolkit that costs just pennies while guaranteeing dollars in return. And that's just something to think about. Remember, friends, when you want the truth about the global economy, just follow the money. Have a safe and prosperous week, and we'll see you right back here next time. Until then, God bless.
Contained on the Follow the Money podcast is strictly for informational and educational purposes. It should not be construed as specific investment advice. The views and opinions of our guests and sponsors, including Tom Cloud, are their own and do not necessarily represent the views of FTMDaily.com or Robinson Media Group, LLC. Jerry Robinson does hold an insurance license and at times may offer consulting on life insurance and fixed retirement income products. Follow-up, individualized responses to email or phone requests that involve the rendering of personalized investment advice for compensation will not be made absent compliance with state investment advisor registration requirements or an applicable exemption or exclusion and applicable insurance regulations. Past performance is not indicative of future results. You should be aware of the real risk of loss in following any strategy or investment discussed on the podcast. Remember, never do your financial planning through podcast or radio. It's your money. Be wise. Do your due diligence and always consult a trusted financial professional before making any financial decision.